Welcome everyone to FiveTwo Investments latest presentation. Today is the 29th of October 2021. My name is Marthunis Oosthuizen and I'm coming to you from South Africa. It's a beautiful place to be and I'm thankful to be here. Today I've got a lot of interesting information to cover with you. I just want to let you know, out of all the presentations I've ever done, the data I've ever gathered, the data I gathered from this presentation is the data that has personally impacted my view and thinking the most out of all presentations I've ever done. So I'm very excited to share this information with you on this beautiful day. And I hope that it will have such a great impact on your life as it has on mine and help you to view the world and the circumstances currently in a different light and help you to understand what's going on. What I want to start off with today is this picture that's in front of you of the ocean with the sand. Most people would probably not have noticed that there's a guy dead center in this picture. Yes, there's a man dead center in this picture. If you look closely, you'll see his head and his shoulders and his hair. If you step a little bit back, you'll see his shadow is shining north of him. Now, in the same way, most people probably did not notice this guy, even though he was right in front of you. Today, I'm going to show you information that's been right there in front of you, but you didn't notice it. And then what I would like to do, and this is my goal and aim of this presentation, I'm hoping that you will be able to take the news, the noise that's out there, and be able to understand it, and not just understand what it really means, but then to be able to say, how does this impact my life, my investments, my position? Now, I'm very excited about this presentation, and I really hope and believe that you will send this presentation on to all your friends, because this presentation, unlike my previous presentations, which are mostly targeted at my retired clients, which is what I specialize in, this presentation is going to help most people out there. And that's why I'm going to be sending on to a lot of people that I know that's not retired and not my clients. This presentation, I believe, will help you to make better and wiser decisions for the next time coming. So let's jump straight into it. FiveTwo Investments is about giving you peace of mind. That's our company's slogan. We've been around since 2014. I've been a broker going on my 12th year now, and I love what I do. I've got a lot of passion for what I do. I've got a lot of passion for trying to understand the world markets and what's going on. And what I believe differentiates us from the rest out there is that we actually make active decisions on our clients' investments. We don't just put them somewhere, leave it with the asset manager and hope that it'll perform well over long term. We've got an in-house investment strategy. And on top of that, I actively manage where the money will be invested. And we make changes from time to time. Now, this is great. And it helps when you know which direction you're going into. But before you can know which direction you are going into, you first need to understand what's going on around you and what's going on in the world. And that's what we're going to uncover today. So let's jump straight into it. Let's have a market update. I always love seeing what's going on in the world. And right now is more special than it's ever been before, because I'm going to show you the biggest changes the world has seen in the shortest period of time. That's going to blow you away. Now, a slide from my previous presentation, and please, if you haven't watched anything of us before, I highly recommend watching our last two presentations. You can find them on the YouTube links on our page, on our YouTube page. I will put a shortcut to them at the end of this video so you can get straight onto them. Please watch them. It's going to give you a lot more in-depth explanation on America printing money and how investment strategy works. So please have a look at that. Now, this slide comes from my previous presentation. Basically, it's got to do with America printing money and trying to stimulate an economy that I believe is dead. Now, the last time we left off, which was just about 3 months ago, America was just over the 8 trillion mark of printing of money. Just in a short space of time, in 3 months, they have printed over 300 billion US dollars. Now, this is the equivalent to South Africa's GDP over a year. Let's say that again. America printed the same amount of money to boost the economy in the last 3 months than what South Africa's entire GDP is of an entire year. Now, I believe that's the reason the stock market is positive. That's the reason why it keeps going up. Now, I know a lot of other people believe in this as well. And so I'm going to elaborate and explain a little bit of the parameters around it. Something I love doing is taking the complicated, the jargon that people in our industry like to use, and make it plain and simple for the average person out there that knows very little about investments to say, oh, wow, I actually understand that. That makes sense. I know how that works now. So I'll just put a little bit of a disclaimer in there. If you're a financial advisor or you're an asset manager and your client sends this on to you and say, what do you think? Please don't think I'm uneducated because I don't know the jargon and because I'm not explaining things in the correct technical way. I'm trying to explain it in a way that the average person out there can understand, especially my clients. So let's take a step back and let's look at how much money has been printed. Since 2008 up until 2020, America's Fed has printed $3.3 trillion. In the year 2020, they printed $3.2 trillion. So they therefore printed nearly the exact same amount in a 12-month period than what they printed the previous 12 years. That's a multiple of 12. Now, if you listen to my previous presentation, I go into detail about how I believe that is the reason that the American stock market has been positive, and I believe that's filtered through the rest of the world. That's the reason why global markets are positive right now. In 2021, they have printed, up until now, $1.1 trillion. If they carry on at the rate that they are right now, by end of December, they would have reached about 1.3, 1.4 trillion. Now, I want to take South Africa's GDP as the benchmark. So as the multiple of 1 annually. So if America prints $320 billion, or back in the years of 2008, it was a little bit less, we took the multiple of South Africa's GDP. So between the year 2008, 2020, they printed a multiple of 1. 2020 goes up to a multiple of 12. Currently, we're at a multiple of 4. Now, most people who don't understand numbers and these things, they might think that 4 is less than 12, therefore everything's okay. I don't want to view it that way. When you kickstart a car and it's dead and you've got to push it, it takes a lot more force to get it going from standing still than what it takes to keep it pushing when it's already rolling. So I would like to ignore the year 2020, and I would like us to look at 2021 compared to 2008 to 2020. And you'll see that we are currently at a multiple of 4 times greater. The same thing that kept American markets going for 12 years has now been multiplied by 4 to keep the markets going. And I've got to stress this because I'm getting calls and people asking me, why has our position not performed yet? What's going on? My friends are making money. This is making money. That's making money. We're getting compared. But those people on the stock market, I'm going to show you today that anybody who's got money in the stock market right now has got a lot of problems on their hands in the near future if they don't get out of that position quickly. So I would like to compare multiple of 1 to a multiple of 4. It's a lot worse right now than what it was. Now, this graph is the American stock market, the S&P 500, the 500 biggest companies from 2020 January till now. So just under 2 years. Now, the reason I've taken this time period is because that's just before coronavirus came out and caused havoc all over the world. Stock markets crashed, and then after it crashed, it rose. But I want to compare it to America printing money over that same period. So I shortened the period from the previous slides, and I'm just showing you 2020 till now. Notice these arrows. Now, I want to tell you, I designed this arrow and I then copy and pasted the arrow. I didn't change the trajectory thereof. I didn't change the length thereof. These are the exact same arrows. Coincidence? I don't believe so. I believe that the American stock market is only positive because of America printing money. Bottom line, this is not complicated. The proof is right here. But I'm going to show you that things are going to get a lot worse. Let's talk about understanding the headlines. Part one, I'm going to break this up into 3 parts. I'm going to explain different topics in each part. You'll often hear news. They're talking about the debt ceiling being raised. They're talking about debt to GDP ratios. Clients often listen to financial talk. And there's a lot of jargon in there that they don't understand. I'd like to explain some of this. And then I'd like to bring them all together and show you what I believe is going on in the world right now. This graph shows you the American government debt. It is increased at an astronomical rate. From just before 2012, 8 years on, it increased by $7 trillion US. Now, that's a really, really big figure. You saw just now that the total money that's been printed is sitting at just over 8, which meant that it was just about 7 trillion that they had printed. But the American debt has increased by that same figure. This is where it gets worse. In the last 24 months, it has increased by the same figure. So same figure, less than a third of the period. This is crazy. This is crazy. It's actually a quarter of the period. The trajectory has gone up. This is the problem that I've got with what's going on in the world right now. Not the fact that things are getting higher. Food prices will always get higher. Stock markets will always go higher. But the trajectory, the multiples can't get higher. It's impossible. So let's look at how that effect plays into the rest of the world. I want to look at something called the debt to GDP ratio. This is something that's often discussed in financial talks. So if you've ever wondered what it means, listen carefully. I'm going to make it plain and simple. American GDP, so the American total produce for the year 2021 or 2020 was roughly about the same, is $21 trillion. Now, when you compare that to the debt that I just showed you, which sits at $28.5 trillion, you'll see that the amount of total income from the country is far less than that of the government debt that they've got. If you had to calculate this percentage, it's sitting at 136% as of October 2021, this year. This ratio, just at the beginning of last year, sat at 105%. I remember going to presentations, listening to talks, and everyone was ranting and raving, saying, the world is in a big crisis. Government's debt to GDP ratios are starting to go over 100%. America, Italy, a few other countries, Greece and Japan are sitting at crazy figures. But those are countries that we don't really look up to as much as countries like America. America went in less than 24 months from 105% to 136%. This is crazy. This is not something that's just okay. If you're wondering about the stock market being positive and you're saying, why don't I get a good return like my friends? Well, if your friends have got their money in the stock market and they don't know that the government debt has gone up astronomically and that it's going to cause a massive collapse soon, well, then your friend's going to lose all the money that he's got. Let's take it a step further. This was all due to the government increasing their debt just in the last 2 years, because 2 years ago, that ratio looked a lot better. Now, this is a big concern because the debt is repayable at whatever the country's interest rate is. Now, the country's interest rate is currently sitting at 0.25%. Now, that's not much, but I want to pause here quickly. Donald Trump, I know a lot of people don't like the guy, but Donald Trump spent a lot of time being a business guy, knowing how markets work, knowing what is needed to get economy to get started, spent a lot of time increasing the interest rates, because that's how you get economy to pick up some traction. And from 2019 at 2.5%, immediately down to 0.25%. This is crazy. They were forced to drop it. Why? Let me explain to you why. If you take that $28.4 trillion debt, that is repayable at whatever the interest rate is. Now, at 0.25%, it means that the government needs to repay their debt at $71 billion a year. So that's the interest over and above the fact that they've got the debt. So if they only repay $71 billion, it means that the debt amount is staying the same. Now, remember, they've increased the debt by $7 trillion. So they need to work on a plan to get the debt down, not up. And look here. This is just over a week ago. They were talking about increasing the debt ceiling. Now, this is from the Wall Street Journal. The House approves extension of the debt ceiling into December. The bill would increase the debt ceiling by $480 billion, an amount that the Treasury Department has said would allow the US to pay its bills. The American government can't pay their bills. The economy that is leading the world, the economy that the whole world looks to see what health the world is in, we've got big problems. They can't even pay their debt. They needed to increase. Now, they've obviously got this law that says they can only have a certain amount of debt. They had to increase that amount just so that they could continue using debt to repay their bills. To make that clear, they are wanting to borrow more money to pay their bills because they don't have enough money, because they've got too much debt. I think that the American government is bankrupt. Now, back to this calculation. If this percentage is moved up from 0.25% to 1.7%, a mere 1.7%, that's $483 billion. Now, the point I want to make is they've only increased the amount of their ceiling by $480 billion. And I'm trying to say, let's see how long we think it will take them to quickly fill up that cup and to be at their ceiling once more. Now, follow me on this. Now, I know this is going to start to get very technical. And if you don't follow the presentation completely the first time, I'm going to recommend, it's the reason we've got it on YouTube, listen to it to the end, listen to it again. I promise you by the third time, you'll understand all of this. I'm making it very simple. The government inflation rate, according to the government, sitting at 5.4%. Now, what happens is inflation, if it goes higher, is going to increase the interest rate. I believe that they know that they are going to have to increase the interest rate. And that's the reason why they increase the debt ceiling, because they realize that they are in a lot of trouble. Now, let's look at this. So the inflation rate, the US inflation rate as of 2021, October, this month, is sitting at 5.4% in America. Just over a year ago, it sat at 2.5%. Their inflation has more than doubled in just over 12 months. Okay, keep following here. The interest rate is higher than what it was in 2007, 8. I'm going to get back to that now. And it is currently at a 40-year high. The last time it was this high was around the 1980s. Now, follow this chart. You don't need to understand much of charts to understand what I'm going to show you now, because I'm going to put it in picture format. If you take these 2 points, so 2007 and 2020, when the crash happened, you will notice that the direction of where the inflation went just after that is identical from 2007 to 2008 to 2020 to 2021. Identical. I did have to change the angle slightly, but it's got the exact same picture, the same type of diagram. Now, this is where it gets very scary, because if you look at the top point at 2008, that was the middle of the financial collapse, which means we should right now be in the middle of a financial collapse, which is what I predicted about 2 years ago, and which is why my clients 2 years ago already were in the position that I put them in, because I believed that this collapse was coming. However, nobody could have foreseen that America would print 12 times more money than what they'd previously printed. That's the only reason why the stock market's positive. But look at this, because this is catching up to them right now. And I believe that they do not know what to do. And desperate people are busy doing desperate things right now just to try and save their lives. Now look at this. If you followed international news, this is the ships that are backed up at the harbors with cargo, food, supplies for America. This was about a week ago. You'll see it says 3 days ago, but when I put this slide on there was about 3-4 days ago. So about a week ago, this headline news came out that American food shelves are empty. Now, be aware, there's a lot of scam photos out there that we know on social media these days. You got to be careful which pictures you look at, and they'll take some old picture and put it with a new headline, and then it's not the truth. But find the reputable news agencies, and you'll see them actually recording it, and it'll be live, and you'll see the food shelves are empty in certain places in America. Let me ask you a question. Us being in Durban, in KZN, having the looting just a few months ago, do you remember what happened to food prices? Do you remember what people were willing to pay just to be able to eat when you did not have food for 3 days? Inflation. Now, I want to ask you the question, what do you think is going to happen not only to American inflation, but what do you think is going to start happening to global inflation? Now, this has all been caused by the lockdowns globally. People have shut down companies, productions for months at end, and this has caused these backlogs. There are no staff anymore. If you actually look into this article, there's no more truck drivers because they don't get paid enough at the harbor, so they're going to take private jobs. So they don't have enough trucks to move the products right now. Now, let's go back to these charts. If inflation is only at 5.4%, but we all know that what the government says inflation is not real inflation. Your medical aid did not go up by whatever South Africa said its inflation was last year, did it? No, it went up by 9-10%. Your car insurance doesn't go the same. Your vehicles you buy hasn't gone up the same. They've all gone up by a lot more. Now, according to some studies, the true inflation in America is sitting at 15%. That's today. That's October 2021. That's not in 1 year from now when things are going to get worse. I believe that's right now. True inflation is sitting at 15%. Now, I want to ask you the question. How long will it take to become bankrupt? Okay, you're in South Africa. You can put your money into a money market. Let's say 2 years ago, before the coronavirus thing started, put your money into a money market, you get 7%. Inflation is 5%. Your money is growing by more than what certain things are going up by. Obviously not medical aid, but the rest of the things it is. What does an American citizen do right now when the food he's got to buy, when the vehicles he's got to buy is going up by 15% a year, but his money in his bank account on his fixed deposit is going up by 0.25%? How long is it going to take before that person is bankrupt? I mean, he's going to have dollars. They're just not going to be worth much. Now, it's a discussion I'm not going to get into this presentation. The depreciation of the dollar, and I personally believe that it's the end of the dollar and the dollar will lose its world reserve currency status. in a very short space of time. I don't think it's long, but I'm not going to get into that now. Let's quickly compare interest rates to inflation. Now, this is also very interesting, and I'm using the data from 2006. The reason I'm using 2006 data is because it's before the global financial crisis, and it's when things was relatively still okay. I don't want to use anything after that because the printing of money has just warped everything. And I'm going to show you this in a while. Do you notice that the interest rates of the USA, Great Britain, or the UK, depending on what period you're looking at, Australia and South Africa, the interest rates are higher than the government inflation, which means put money in the bank account, it's going up by more than what your expenses are going up, which at least means that you're becoming wealthier. And the bottom line is you don't want to have a case where you're putting money somewhere, but every year what you have to buy with that money is becoming more and more expensive and you can't keep up. That means you're losing money, you know. Look what happened from 2006 to 2020. I'm going to flip that again. So South Africa dropped the least, but South Africa is the only country where they did not reverse. Do you notice that the other three countries, the bronze or gold or mustard color bars, are higher than the blue ones? All of these inflation is higher than the interest rate, which means you put money in the bank account, you will not be able to buy the vehicle that you put this money away for next year or the year thereafter. Your money is becoming worth less and less and less. South Africa, it's a good place to be. Guys from overseas, come to South Africa. We got some problems, but they ain't as bad as yours. Now let's compare the inflation and interest rates of America from 2020 to 2021. You will see that the difference between the two has just gone up crazy. The inflation has shot up and the interest rates have gone down, meaning that the gap has widened. You've now got a gap of over 5%, where the gap you had before was 1%, less than 1%, 0.75%. Now you've got a gap of over 5%. Now, if you're an everyday person, how do you fit the bill for 5% gap per year? You just got a normal job. You're barely making ends meet. Where do you put your money that's going to give you growth of more than 5% to make up for the loss? That's not trying to build your wealth, just to keep the money, maybe inheritance, safe somewhere. Now, that was understanding the headlines, part 1. Let's go to part 2. So part 2, I want us to look at comparing global wealth, global real estate, global derivatives. Now, first of all, we've got the global wealth pictured in all these little blocks. Now, every block you see there represents 100 billion US dollars. Now, there's a total of 3,600 little blocks there. Believe it or not, I have counted them. There's 40 in a row going from top to bottom. And that's the equivalent of 360 US trillion dollars. All the wealth in the entire world, every single business, anything that makes money. Now, if we look at the global real estate, every single brick and mortar in the whole world, looking at a total of 280 trillion dollars. Combine the two, you're sitting at just over 600 trillion dollars. Now, this is where it gets scary. This is the amount of derivatives in the whole world. They estimate somewhere between 560 billion US dollars to 1.2 quadrillion dollars. Now, we can't even start to comprehend these figures. And that's the reason why I've put it into a picture format. Now, the size here is identical. So all those little dots are all the same size. And you can see that the amount of derivatives is nearly double the value of all the global wealth and all the real estate. In essence, every single type of investment in the entire world is half of all derivatives. Now, what is a derivative? Most people won't know. Most brokers don't even know because it's not something that we need to deal with. something that asset managers need to deal with. Now, I personally don't really care much about derivatives because it's something that I believe should not exist. But let's look at it quickly, seeing that there's more of it than anything else. Now, it's based on agreement upon underlying financial assets. While a derivative's value is based on an asset, ownership of a derivative doesn't mean ownership of the asset. So let's explain that. So there's Apple shares, and let's say Apple shares trading at $1 US. Two people will go into agreement and say, none of us is going to buy Apple share, but I believe the Apple shares are going down. You believe they're going up. Therefore, we're going to go in partnership, and we're going to say that they're worth $1 US. And whatever they do from here, as it goes up or down, we got to pay each other out. I think it's gambling, quite frankly. And if you remember, this is the reason why we had the 2007-8 global financial crisis. Now, let's look at this quickly. So the derivatives market is, in a word, gigantic, often estimated at more than $1.2 quadrillion. We've been through that. Some market analysts estimate the derivatives market at more than 10 times the size, 10 times the size of the total world gross domestic product. So they believe that it's worth more than 10 times the entire world's GDP. Something that's based on nothing, that's got no backing. If the one guy loses and he's got no collateral, then how's the other guy going to get his money? And he put money in, and people, I'm very concerned here. This is where it gets scary, and that's the reason why I've added derivatives to the presentation. Right at the bottom, you'll see it says, in 2020, there was a 40% increase in derivatives trading volumes, an increase more than 3 times larger than the year before. So just the increase is more than 3 times the one of the previous year, and greater than the surge during the financial crisis in 2007. So remember, the crisis in 2007 was caused by derivatives. Now again, we've got 40% more derivative activity than before. Now I want to ask you the question. Do you think that there was all of a sudden 40% more investment traders or people that are qualified starting to deal with derivatives? No, I don't think the world all of a sudden got 40% more guys just doing derivatives. What I think happened is a whole bunch of people sitting behind the computers, got internet, doing a little bit of calculation. Everyone thinks investments is great because America's printed money, stock market's flying. All their friends are talking about the money that they're making. I think we got a whole bunch of unprofessional traders who, quite frankly, don't know what they're doing. And that is really concerning, because people who don't know what they're doing, don't have backing for it, I think is going to cause the coming crash to be a lot worse. So just if we look at this quick, 2007 financial crisis was basically caused because of the use of derivatives. The reason why I put this up as a Google search, everything I've put in here, and you'll see a lot of the links that I put at the bottom is for you to go and look at. You know, go and look at the links. Go Google the stuff yourself if you don't believe what I'm telling you. But not just not believing what I'm saying. I want people to understand these things, because if you can understand this, you will be able to make more prudent decisions in your own life instead of just making decisions based on some facts. Now, let's go into part 3 of understanding the headlines. Currencies. Now, there's a lot of talk going on around currencies right now. Now, this is the same dots as we had in the previous slides. You'll just see that I blew it up a little bit so you can actually see the dots. I know some guys are going to count them. They're 40 across. But all these dots combined is $95.7 trillion. It makes up all the cash, all the currency in the entire world. Now, here is where, once again, I think it gets scary. The light green at the top, which is a total of 7% of all of that money, is in physical notes and coins and money in savings accounts. So money that can be withdrawn immediately. Only 7%. So you've only got backed up of currencies of 7%. The rest at the bottom are all the dark black ones, so the middle section just below the light green. That would be like your, sorry, those would be your savings accounts one. So the light green is only cash and coins. And then the dark blue one at the bottom, these are like your fixed deposits, your money markets, the very long-term things that's not just, people don't just access them quickly. Now, I want to ask you a question. Does that not look like cryptocurrency to you when you don't have something physically backing up something else? I think we're already in a cryptocurrency world. Now, this is that same amount of coins. So that 7% is depicted per country here, and it makes up 6.6 trillion US dollars. America obviously has the most, Europe's got second most, then everyone else in the world, and then after that, you've got China and Japan. They've got a lot as well. Now, if you have to compare this to what everyone thinks is the new currency, cryptocurrency, it's actually a joke. Now, what I think is going to happen here is, let me actually just give you a little bit to take this in. Do you see that there are not even 3 full blocks of cryptocurrency compared to the rest, physical cash, right? Not investments, investments and fixed deposit, things that are seen as cash that can be liquidated if they had to. We are talking about just the cash, just the notes and the coins in the whole world is a lot more than what Bitcoin and the 5,463 other coins out there are. Now, let me tell you what I think is going to happen. I've never been interested in cryptocurrency, so I'm just going to put that disclaimer out there. I've never had any inclination. The amount of research I've done on cryptocurrency has taken me less than 1 hour in my entire life. Not interested in it. But let me tell you what I think is going to happen, understanding the world markets and what's going on. I believe what's going to happen is the 6.6 trillion up here is going to start to convert to the cryptocurrency at the bottom. But I think that 2 things will happen. One, banks will start to have their own cryptocurrency. They'll force people to use theirs only and their associated paying facilities, and it will be more convenient than everyone else's, so people automatically do it. And just go Google the US Fed coin. I think that governments will start to have their own currency, saying, listen, we don't want people to use these things and we don't know what's going on. We actually want to know what they're doing, so we're going to track them ourselves. That's a whole conspiracy theory on its own. But go and have a look at it, because it's legit that America is actually looking at getting their own government coin. Now, what I think is going to happen is the 6.6 trillion is slowly going to start fading itself into cryptocurrency. Aren't we already there? You know, if you've only got 7% physical coins and the rest is all just accounting on a little computer or spreadsheet, that's basically what it is. So I believe that's what the world will go to. But now let's compare it to something that's real, which we are invested in. Gold. This is the amount of gold that is in the world. Now, the top dark blocks, those are physical gold that's already there. The middle one is all the jewelry, and then the light one at the bottom is gold that's still under the ground. My clients, that's where we're invested. Still a lot of gold to be taken out of the ground. And combined, if we have to compare crypto and banks, which is a total of 7 trillion, if you round it off to the nearest trillion, gold is sitting at 11 trillion. There's more gold in the world to back up every single currency plus 50%. That's why I believe in gold. There's more than enough gold to back up all the other coins that there are. And I believe when you listen to the rest of this presentation and everything else that's scary and that's going on in the world, I believe that's going to be one of the safe places for you to be. Now, you can have 3 positions right now. Now, I know you can have 100 positions, and so don't say there's not just 3. There's of course, there's more. But let's break it down into simple terms. You either believe that the stock market's going to go up and you're in it, and you're saying, let's go for it. I've got a long time horizon. I don't care if there's a blip, even if it's 20 years, I'm going in the stock market. The other position is You can have money market, bank deposit, fixed deposit, whatever that's cash, that's safe. That's not going to go up. It's not going to go down either. You hope it's going to be okay, depending if you're trying to get money from one country to another and your currency is now all of a sudden weakened, then it'll affect you. But majority, it should be as safe as you can get. Then you can believe that the stock market's going to crash. You then go into gold, which is the biggest safe haven there is for when things go pear-shaped. Now that's where I believe things are going. But let me show you what our position is like. Look at our previous presentation we did. I explained in depth how investment strategy works. Watch it a few times, will make a lot of sense. In a nutshell, we take 5 years worth of income that a retired person has, and we stick it into 5 different buckets. Currently, we've put all those buckets into money market because we don't believe that any of the buckets will outperform money market over the next while. So essentially, 5 years worth of income is safe. Doesn't matter what happens to the other in bucket 6 in year 6, doesn't matter what happens to that bucket over the next 5 years. We don't need to touch that money, and that thing can grow, even though it's volatile that it is right now. And I appreciate my clients being patient with that. But you've got 5 years worth of income. So you know you are safe for 5 years. Now, each year, the money in bucket 2, 3, 4, and 5 will obviously go up because there'll be growth on it, and that would make up for inflation. If somebody's wondering, how can I ensure that my income goes up? The rest of the money we right now have in gold. So that's our position. Our position is safe, neutral, and we believe the market's going to crash over the next while, at least 5 years. And for that reason, we are in gold. Now, what do I think is going to happen? What is my prediction? What is my concerns? And this presentation has taken a lot of thinking, and I'm not just doing this presentation for my clients, but I'm doing this for every person around there, not just in South Africa, globally. I want you to know these things. And these 7 things that I'm going to list now were not concerns 2 years ago, 5 years ago, 10 years ago. These all became bigger concerns in the last 2 years, and especially in the last year. This has just become a big problem. They are quantitative easing, infinite. America said, we will print as much money as is needed to keep our economy afloat. Watch my presentation from 2 years ago. The US government, I believe, is bankrupt. I think by December, January, there's going to be big problems. The US interest rate is at an all-time low. Now, watch my previous presentation, how I explained that's what you need to use to stimulate an economy. They can't do that, as I explained in this presentation. It just means they'll have to pay more interest, and they can't afford that. The US inflation is at a 40-year high, and I believe it's only going higher. There are inexperienced derivative trading taking place. There's a lack of physical cash, or let's not even talk about the gold standard that was taken away in the 70s. And then, and this is one I didn't even touch on in this presentation, but I think this is the biggest shocker of the century that we live in, is that we have got the highest dependency on government grants globally. You think South Africa, that's what's going on in our country. You know that people in America are not working because the grant they get is more than what they would get to work. So they just decide to stay at home. That's the reason why the American government debt has gone up. So I believe that these red flags, these warning signs, are all happening at the same time right now. And this has not been the case 2, 5, 10 years ago. This has happened now. And the percentages, remember the trajectory I was talking at right in the beginning. The trajectory, the multiples are at ridiculous rates right now. It's not what it was. These rates, you can't continue at these rates. So let me give you my prediction. And I'm recording this because I want people to reflect back on this in 6 months from now, a year from now, 2 years from now. Here's what I think is going to happen. We are going to have debt spiral out of control. The dollar is going to become worthless. US stock markets will collapse and the rest of the world to follow. Derivatives will cause the crash to worsen. Worldwide debt will become unpayable. Jobs will be lost globally at an unprecedented rate. Highest employment rate and biggest dependency on governments. The world will look for safe havens. Gold and other precious metals will skyrocket. The global supply chain will collapse due to insufficient demand. New trade routes have already emerged since the global lockdowns. The new trade routes will rise and strengthen. Food will become unaffordable for most. Countries which are most self-sufficient will become the leaders and the forerunners. I'm happy to live in South Africa, where we have great farmers. I already have a vehicle available for those who want to invest in agriculture. I believe that going back to the basics is what the new future will look like. We're coming to the close of this presentation. I am more concerned about what's going on globally than I've ever been in my entire life. However, my clients and I don't have to be concerned because we are positioned for this global collapse. The question is, are you positioned for this global collapse? Please look at my previous two presentations where I show the devastation that took place in the 1930s with the Great Depression. I believe we're on the brink of something that could be as bad as that, if not worse than that. I think we have got big trouble coming. And if you are not positioned for it, you could be financially devastated. I don't always do this, but my personal contact details are on the slide. You can get a hold of me, you can contact us, and we can see where we can help you. Please send this video out to as many people as possible. I'll put the links to the previous presentation on here. You can click on them or just go to the YouTube channel. You can find our information online. Go and have a look at our website. Go have a look at our clients' testimonials. We've had clients with us for a decade. We have been around and we love what we do. Thank you for watching this. Thank you for your time and God bless.